Today, I'm going to show you my favorite indicator, the one that helps me catch mega moves week in, week out. Moves like 1,000 points on the Nasdaq futures, 200 points on the S&P 500 futures, and hundreds of points on the Russell futures. These are the type of trades I'm after. Big trades, not pennies. Now, I know that might sound wild to you, but the indicator that I'm about to share with you is designed to take advantage of premium reversal points. And that's why I'm able to spot the best risk-reward opportunities in the market. But here's the thing, this indicator didn't just help me. It's helping traders who are trading live with us every day in our trading community. New traders, busy traders, people from all walks of life using the same strategy. And the best part, it's stupid simple and you probably already have it in your charts. However, most people use that indicator the wrong way. And like with most indicators, if you use them the wrong way, they're going to cause more damage to your account than good. And unfortunately, I had to learn that the hard way. When I first started trading 12 years ago, I thought that all I need is one indicator that can predict the future. I blew up account after account until I finally realized the truth. Most indicators are lagging. No indicator can predict the future, but the one that I'm about to share with you shows with clarity when the price is too expensive to buy or too cheap to sell. And that indicator is called the RSI. The RSI don't lie. So in this video, I'm going to walk you through my exact 3-step method. And at the end, I will show you live trades and give you a bonus on how to squeeze even more out of this indicator for more accuracy and more profitability. Let's get started. So before we start, we want to make sure that we set up our charts the right way. For that example, I use here the platform trading view. So the first thing we want to do is add the RSI to our charts. And if you're using trading view, all you need to do is look here at the top and you will see this tab indicators. You want to click on indicators and type in RSI. This is the relative strength index. All you need to do is double click and add it to your charts. And we're going to leave the settings as they are, the standard way. Now, the second thing we want to do is we want to set up our charts to 1 hour. You see right here next to indicators, you have the time frame. The 1 hour is important because the RSI gives us the best and cleanest signals and opportunities on the 1 hour chart. Once you choose the 1 hour, you're ready to go. So what exactly is the RSI and what information it is showing us? The RSI measures how fast the price is moving over time. When the price moves too fast, too far in a short period of time, usually this is an emotional move. So that indicator picks up when a price goes off the rails and starts moving too fast, either to the upside or to the downside. And we're going to use that information about this emotional move in our advantage. So this is how the RSI looks like on our charts. The lower part of the RSI, this zone right here, is RSI 30, and that means that the price is oversold. The upper part of the RSI, in this case 70, means that we are in overbought levels. So for now, I just want you to remember that RSI lower than 30 means oversold and RSI higher than 70 means overbought. Now, if you don't understand all of it, don't worry about that. We're going to go through plenty of examples and through the exact rules, and I'm sure you will understand everything in depth by the end of this video. So now that we know that, let's get into our rules and into step number 1. And by the way, the rules are extremely simple. When the RSI is oversold at 30 or below, we buy. When the RSI is overbought at 70 or above, we sell. And if it's anywhere in between, we do nothing. No guesswork. Now let's take a look at our first example. So this right here is the stock PLTR and the 1 hour chart. Let's take a look at the RSI. As we can see, the RSI is oversold below 30. Based on the information that I gave you, what do we do in this example? Exactly right, we buy. Now let's go ahead and replay and see what happens. The price goes straight towards the overbought area. Now let's take a look at another example. This right here is the Nasdaq NQ futures and the same time frame, 1 hour time frame. And as we can see, we are right at the 70 RSI. Based on the information that I gave you, what would you do here if you had to place a trade? Sell or short sell? Now let's take a look what happens. As we can see, the price dropped straight into the oversold area. Here is another example, same asset, same time frame. So in this example, RSI is way below oversold and therefore we're going to place a buy order. And as we can see, the price shoots straight from oversold towards the midpoint of the RSI. Now you can go a pretty long way just by following this rule, buying at oversold and selling or short selling at overbought. But what if I told you that by adding one more filter, you can boost your accuracy by 20% more, which leads me to step number 2. So in our step number 2, we want to check on the chart if the RSI is oversold, meaning 30 or below. We want to make sure that we are at a very important support zone, meaning at the previous low or a previous breakout zone. If the RSI is 70 or more, meaning overbought, the same thing, we want to zoom out and we want to make sure that this price is right at the previous resistance zone, previous high or breakdown zone. Now, I know that might sound confusing to you if you're new, but don't worry, we're going to look through plenty of examples. What we're doing here is just we're adding more accuracy to our trades. So why do we look at these support and resistance areas? It's actually very simple. It's because this is where smart money puts their orders. So when the RSI is oversold and it's dropping into a support area, this is where big institutional traders are placing their buy orders, and this is where retail traders are placing their stop losses. So all of that acts as a pocket of liquidity, and this is where the price most likely reverses. And it works the same way in reverse. If the RSI is overbought right into resistance, this is where big institutional money are placing their sell orders and small retail traders like you and I are placing their stop losses. And institutional traders know that. This is what creates the pocket of liquidity for them to sell into. And this is what we're going to use in our advantage. And these areas act as magnets, which makes our RSI signals more reliable and adds more accuracy. So let me show you how that exactly looks like. So this right here is the Nasdaq futures, same time frame, 1 hour chart. We want to stick with the higher time frames. And as we can see here, we're way below 30 RSI. We're pretty oversold here. So in our step number 2, we want to zoom out and see if there is a previous support area where potentially big money is going to start placing their buy orders. So for that, I'm going to zoom out here. And as we can see, this was a previous low and it was tested 2 times. This makes this zone a pretty solid support area for our trade. So now we know that big money will potentially reverse the price at this area, and this is where most retail traders like you and I are placing their stops. And I'm gonna be honest with you, when I first started trading, I would look at the chart like that and I would think this is totally bearish. It looks like lower lows, lower highs, and I would start shorting into that. And I would be totally shocked when the price reverses and starts to go against me, because I would not use this information with the oversold zones and the important liquidity zones. So now we can place a buy order because we have our 2 criteria filled. We are right at this oversold area below 30, and we're at a very important support zone. As we can see, the price bounces straight towards the previous breakdown zone and resistance. And if you entered around this zone, this could be your potential take profit area. And by the way, this is the exact trade I took live in our trading community. Now let's take a look at one more example, and in this case on the short sell side. As we can see, we are right at the high of our RSI 70 overbought. And now we want to zoom out and see if we are at an important resistance zone where potentially big money is going to place sell orders. I'm going to zoom out. As we can see right here, this is the previous high and this is a breakdown area. So this makes our sell that we're going to place a very nice risk versus reward setup. And because we have the two criteria filled, we're right at overbought and we're at a very important resistance zone, right at the high end breakdown zone. I'm going to place a short sell order. And as we can see, the price drops straight down towards the previous lows and support zone and goes also into this oversold area as well. So if you took this setup, you have here 1:7 risk versus reward ratio. This means if you risked $1,000 on this trade, you would have made $7,000. And this is exactly how you can capture this big risk versus reward trades and not just scalp for pennies. You're able to capture the trades because you're at an extremes, overbought or oversold RSI, and you're at a very important liquidity zones where institutional monies is going to reverse the price and you can just take advantage of that information. Now that alone is going to sort out the noise and provide you with these huge setups and trades. But I want to add one more filter that can give you even better trades, better accuracy, and more clarity where to enter. So for that, we're going to use a very specific candlestick formation, which leads me to our step number 3, using the Pitchfork candlestick formation for our entries. So let's summarize first. In our step number 1, we were looking for overbought and oversold RSI zones. Meaning if the RSI is below or at 30, it is oversold and we're looking to buy. If the RSI is at 70 or above, we're looking to sell or short sell. In our step number 2, we added one more very important filter. We're looking not only that a certain area is overbought or oversold, but we're also now zooming out and making sure that when we look to the left, if the asset is oversold, we are at a very important support zone. Or if the asset is overbought, we're at a very important resistance zone. And now we want to add one more thing in our step number 3, which is the Pitchfork candlestick formation. So what exactly is the Pitchfork? When we are at support, we want to look for 3 candlesticks. The first candlestick right at support is when the price goes down. Normally, the candlestick is red. When the price stops right at support and it's oversold, we want to look for one first green candlestick. And the entry happens as soon as the price starts to go above the high of that first green candlestick. So the entry in this case happens on the third candlestick. If we're short selling, is the other way around. We're looking at overbought zones 70 plus RSI, and we're looking that this is happening at resistance. And normally we will have a few green candlesticks in a row right into resistance. And we want to see one red candlestick first, closing red, and the price going below that first red candlestick. So in this case, our entry is below that low on the third candlestick. Now let's take a look how that looks like in real life, because this is the exact trade I took live in our trading community. And that right here is the ES 1 hour chart. Remember, we're sticking with that time frame. And as we can see, we're right here at the 70 RSI overbought. And so now we want to be looking for a short entry. But before that, we want to know if we're at an important resistance area. And as we can see here, this was the previous high. We slightly broke above, which could be just institutional traders grabbing liquidity. So that right here is a valid setup. So in order for me to enter, I want to see one red candlestick first, which is happening here. We have one red candlestick, and I want to enter as soon as the price starts going below the low of this candlestick. In this case, the stop loss can be placed slightly above. So that right here would be our entry and the stop loss above. Now, just to demonstrate you how that looks like, I'm going to place a sell order. And as target, we can use that previous low here, which acts as a previous support zone. As we can see, the price goes straight into this previous support zone, and this is a great area to either take partial profits or completely close your trade. And based on that nice risk versus reward trade, I am here willing to take the profits at this point and close the trade. So this is a very good example for a trade that reached 1 to 8 risk versus reward. So again, if you're risking $1,000 per trade, you should be able to make 8,000 in this case. This right here is the RTY, Russell 2000 futures, and again, the 1 hour chart. So again, we're starting with the RSI, and as we can see, we're right here at the overbought RSI 70. Now we want to look to the left and see, is there a previous resistance zone? And in this case, we can see it very clearly. This is right at the previous high-end resistance area. Now again, back in the past when I was trading at the very early stages of my career, I would just look at that and blindly start buying into that, thinking this is the breakout, it's going to continue higher, but didn't realize that this is actually an overbought area for institutional traders just to get slammed and cut into pieces. So this is looking like our setup is going to happen. We have one red candlestick. We're looking for the price to go below that red candlestick for our entry. Again, we have the resistance, we have the overbought area. All we need to do is click on the short sell button. And I'm going to do that right now and replay that for you so that we see what happens next. As we can see, the price goes straight to the downside, and it's not a coincidence that it goes straight into this previous support zone that acts as a potential reversal zone. Now, if you're new to that, you can start moving your stop loss slowly and trail your stop loss slowly to the downside so that you secure your profits and let the winners go. So let's say you're already up on that trade, but we don't know if this is going to continue further lower and break through the lows. What you can do here in this example is just slowly trail your stop to the downside. So because we're here right at the support zone, I'm just going to go ahead and close that trade. So this right here is the stock PLTR and again the 1 hour chart. And as we can see, we're right below the 30 RSI, way oversold right here. And now we want to zoom out and see if there is a previous support zone for our step number 2. So I'm going to zoom out, and as we can see, we're right here at a very important support area. This zone has been tested a few times, therefore I'm going to draw this line. Now in our step number 3, we're waiting for our confirmation. We want to see one green candlestick first and the price going above that green candlestick. This is going to give us our entry. Now we have one green candlestick, and as soon as the price starts going above that candlestick, this is our entry for a long. Therefore, I'm going to hit the buy button. As we can see, we're heading towards the previous resistance zone right here, and therefore this is a good area to take profits and close the trade. Now, this is how you can use this overbought and oversold areas in combination information with support and resistance and candlesticks to find the best entry and sort out the whole noise and find really high probability setups, big trades, and not just some scalping crumbs. So I hope that helped you a little bit. And if you don't know what zones to look at, we send each week our gains guide where we map out our plan for the week, which are the most important liquidity zones for the S&P 500, Nasdaq, Russell, and YM, the Dow Jones. So if you want to get that, make sure to check that. The link is just right in the description below. I hope that video helped you a little bit, and I cannot wait to see you back here on our channel again. Bye for now.